So, hi everyone. Nice to have you here today. Today is to talk about how to unlock hidden value within companies. So we will be talking about my intangible asset due diligence approach, especially for family offices and investors. So I am Dr. Benjamin Del Sol. I am a fractional Chief Intellectual Property Officer and Chief Intangible Assets Officer for various companies across the world. I have a PhD in quantum physics, which is not related to that today, but I have also a diploma in neuroscience, which is very useful for what we will be talking today. And of course, I have a master's degree in IP law and management, which is even more important. So let's start right now and let's see why intangible assets are so important today. So okay. Just imagine that 90% of the value you're investing in is just invisible. And you don't know, of course. Traditional due diligence just focuses on, financials, legal compliance, and tangible assets. That means buildings, facilities, stuff like that. It was good. 70 years ago, it was exactly what we needed when we were doing a due diligence. But now we are in a knowledge economy, and intangible assets hold the real power. So basically, yeah, tell me.
And this is just, really why we came together here as Quantum Stellium, is because our experience, obviously helping companies, Donald's experience with his, several billion-dollar exits. This is that part that many companies don't know that they don't know, or family offices don't know that they don't know when it comes to really being able to understand, the risks, but also the value inherent in what they're investing in when it comes to companies. So for those of you who are new to all of us, Benjamin has introduced himself. I'm Jasmine Suryarachi, the co-founder of Quantum Mogul with
Donald Kelleher.
Also co-founder of Quantum Mogul, and we'll be popping in and out in this presentation together with Benjamin. We form Quantum Stellium, and we'll be sharing some of the perspectives, both Donald from the investor or maybe even the family office side, and for me, maybe even from the side of founders as well as companies.
Excellent. So, as you know, you cannot manage what you cannot measure. So if you want to invest wisely, you need to be able to see where you put your money. So what several studies have shown is that today, if you take, for example, the S&P 500 companies, you will see that there is a lot of studies on that. Just ask Google or ChatGPT or whatever about that. But 70 to 80% of the value of these S&P 500 companies just relies on intangible assets. Okay, so it's huge. It's huge, and most of these companies, of course, not S&P 500 companies, but several companies doesn't really manage that. They don't know what it is. They don't know how to deal with it. So basically, they just let it as it is without knowing even that the real value of their companies are there. So, of course, the problem is for investors, because when you don't assess that means you just assess something like 20% of the real value of a company. And so you don't see all the risks, of course, related to these intangible assets, for example.
And Benjamin, you're absolutely right, because the individual investor obviously faces problems in terms of what they don't know that they don't know, or what they can't measure or see. But Donald, you recently did for our newsletter an incredible article on this when it comes to the over-evaluation or overvaluation of many of these tech companies right now.
Oh, yeah.
Right. And we're seeing different bubbles that could remind us of some of the bubbles that burst in the past.
It's like the dot-com bubble and the property bubble, but especially the property bubble was driven by banks, but the dot-com bubble was driven by false understandings, really. But all these bubbles, good things come out of them when they have created stuff, except a lot of people get hurt in it as well. And it's very easy to see that this AI thing is in that space, if not hitting for it, if not already in it,
Which brings us back to Benjamin's evaluation here.
Yes. So just to explain to everyone, what are intangible assets, basically. So of course, it's not just patents. It's not just intellectual property. It is intellectual property. So patents, trademark, trade secrets, designs, and so on. But it's not just that. It's also human capital. So I mean, key talent, know-how, culture of the company. It's relational capital. That means brand, customers, relationship, partners. It's also the structural capital, software, processes, infrastructures, and it's, of course, organizational capital, leadership, governance, mission, vision, and the digital assets, of course, data sets, AI models, proprietary tools. All of these are intangible assets. And today, we don't have a chief intangible asset officer in companies. We have a guy dealing with data, yes, indeed. We have a guy dealing with talents, yes, it's called human resource. We have a guy dealing with branding, basically, it's marketing. But we don't have someone to be able to see the big picture and to be able to connect all these dots together. And these assets are the real levers of growth, differentiation, and exit value. So for investors, it's very important to be able to assess all these different points. So why family offices and investors must care? Basically, I mean, you will have a higher confidence in valuations if you make informed decisions based on complete value assessment. You will have a better portfolio alignment, of course, especially for long-term strategic goals. What we are talking today when we talk about intangible assets and IP is that, so it's intellectual property, it's for long-term investment. If you want to make a 10 times value in only 2 years or 3 years, it's not exactly the correct approach, I would say, because IP and intangible assets are really for a long-term investment. For 10 times your investment in only 2 or 3 years, it's more to look for buzzwords and what people are attracting quickly and very fast. But it's not for family offices, I would say. But this approach, which is a long-term way to put money on a company, is for family offices.
Absolutely. And I think Donald can talk to this here at Quantum Mogul and with Quantum Stellium. We really work in terms of legacy, right? Whether it's the legacy of a company, in terms of, your expertise, Benjamin, which is managing extraordinary IP. We come in with the collaboration here with Quantum Mogul within Quantum Stellium to help commercialize extraordinary solutions, maybe even outside of the original intended use of those, because there are some really extraordinary solutions out there that really never get to reach the millions and even billions of people that they're destined for. And the family offices and other types of investors who have a legacy, who have legacy in their lens, so to speak, are really very careful, right, about what they're attaching their name to, because these investments really reflect something about that family or something about those that founding group. So Donna, you can really speak to this here about that longer term vision.
Yes, well, I suppose you see, it doesn't matter what kind of technology you have, legacy is always going to be there, and it is only how do you manage legacy. What I see that AI can do, which is something nobody really talks about at the moment, is I can see that it can map out and manage a legacy chart better than any time in history, and I think there's an opening there, right, for people to embrace this. In a bigger way, right, and to actually look at it in a more broader way than what they're looking at it now. But that's all down again to education, which of course is what we do here in Quantum Mogul, Quantum Stellium, is to educate the people on the future way of doing business and how to leave a proper legacy and manage it.
And so the solution right here is very, very important for family offices to be able to have more control, more visibility, and actually more sovereignty and agency in terms of, what fits within their portfolio and what does not.
Mm-hmm.
And I would add something that it's help a lot to detect any risk. It's important to be able to identify potential issues before they impact the returns. And if you don't do this assessment, if you don't follow this framework, basically you just put money based on the tip of the iceberg. You see just a small amount of what is really the company where you put money on it. So of course, after that, you have issues, problems, and I was not aware that this company was infringing this IP right, for example. So, and we lose tens of millions in battles, legal battles, and so on. But this is very easy to check before putting your money on it. So, this is my intangible asset due diligence framework. Basically, it's very simple and straightforward. First, we need to identify, of course, the value. So it's what I call the asset discovery and valuation phase. Then we will have everything about ownership and control. It's very important to check that the intangible assets you think you have are really yours. So it's very important to check the ownership and to be able to check the the rights and access management. Then we will have strategic alignment, of course, which is how do we align these intangible assets with the business goal of the company? Because, for example, a company filing patents for a specific market, but trying to make money with another market, I would say there is no fit. That doesn't align with the business strategy. So they are just burning cash, basically, because their patent is not useful for their market. It's very important to be able to use IP and broadly intangible assets as a business tool for the business. So, of course, there is a phase which is called risk exposure, which is clearly to identify any potential risks and to decide what we do with these risks. Then we have the leveraging and monetization phase, where we create value, additional revenue streams based on your intangible assets. And of course, there is the last phase, which is a maturity and management phase, where we aim to put in place processes to make all of that works, not for just an assessment, but for a long-term relationship and success.
Absolutely.
So this is a step-by-step view of the process. So we have as I said, first, of course, we need to do this inventory work. Then we need to do that the diagnostic phase, indeed. And then we will have this red flag report. Very important to be able to assess the risk. Again, a risk is not a big deal. It's better to know and to have put in place contingency plan and so on, than just hoping for the best and never be prepared, So we have then the strategic fit assessment. We will have the IP focused deep dive that we will talk just after. And then we have an actionable report. So tell me.
Just to go back to this, this framework, why diagnostics and the red flag report are really important from the investing perspective is we always, come into difficulty, don't we, Donald, when we invest with our heart, right?
Oh, yeah.
It may sound like the sexy new technology. The founder may have had a great exit before. So we can place weight on, or our friend recommended it, right? We can place weight on different factors that actually may not be the best when it comes to providing the complete picture for us to decide, what fits within our investment thesis and what is maybe better left to decide.
No, exactly. It's a data-driven approach. It's very important because, again, if you want to just make a quick gain, of course, you can put money on a company because the guy who builds a company is a famous guy, so probably will be able to raise money quickly. But it's not a real exit. It's not for a long-term investment strategy. So it's basically not for a family office. It's good for a VC, for example, but not for a family office. The strategy are not the same. So now we zoom on IP. Why? Because on IP, we have all this legal framework with it. So it's very important to do this IP-focused due diligence part, which will be, of course, reviewing the portfolio on a legal basis, technical and strategic basis. We will have, of course, again, the ownership and documentation, which is very important to know if you own your own patents or not. Sometimes companies just own a license, on technology. They don't own the patent, so it's important to know that. Maybe you don't want to put money on a company that doesn't own its own IP, basically. We have everything about competitive positioning and freedom to operate. Very important. If a company is very innovative, but what she's designing, the product, the service, just infringe the IP rights of other companies, they will not be able to sell anything. So it's good. They have maybe tons of patents, but if they can't sell it, they can't make money. So freedom to operate is critical.
Speak to this, Donal, in terms of the golf club example.
Yeah, totally. Like, I mean, I always make the example that some people, right, instead of taking lessons, they buy a club that Tiger Woods would use, thinking they can be as good as Tiger Woods, which is they're better off if they put that money or even half of it into lessons. So that's back to the education again, you know?
Indeed. And just having these extraordinary solutions does not a profitable and scalable business make that can really be a market leader. So just having the great solutions is not the same as having the understanding of really how to commercialize them, how to sell them at higher and higher levels.
And to know if you have the right to do it.
Exactly.
Again, at the end, I mean, IP is based on law, so it's very critical to be aware of that. And of course, we have IP, which is connected to everything in a company: marketing, communication, R&D, legal, decision makers. So it's very important to have this IP culture and management part of the process to know if the company is aware how is the IP management basically in the company. So we have, of course, the strategic fit, which is, does the IP strategy fit with the go-to-market strategy, product roadmap, business model, and so on? And to assess all of that, because you can't assess all of that without indicators, we use KPI dashboards to check the IP maturities, coverage, monetization, readiness, and so on.
Now, this is amazing because it creates, so much visibility in the data visualization, right? It allows for you and our team to really, work with family offices, VCs, investors, et cetera, and very quickly bring more people on board in terms of understanding. So that's really a fantastic, that's a fantastic feature that you've developed, within your system, Benjamin.
Thank you. I mean, it's very important when you put money on a company to know what is the state of the IP. I mean, I heard so many things. Some people say, yes, we have a worldwide patent, which does not exist, by the way. There is no worldwide patent. Some companies think they have patents on stuff, whereas the patent is just a pending patent application. That means it's not still granted yet. And so many things. And when you check with some different VCs, for example, or investors, they just add a small checkbox saying, do you have patents? And that's it, nothing else. And it's, again, when IP, it's a huge part of intangible assets, which covers something like 60 to 70% of the value of a company, especially tech companies or deep tech companies even more. You cannot afford not checking it deeply. It's like just buying a car because the color is good, and that's it. I like the color, I just buy the car. I don't check the engine, I don't check anything. It's not possible. Unless you don't want really to make money. That's a possibility.
That is a possibility. That's a really great analogy, Benjamin. Some people would say, as seasoned investors with billions of assets under management, we do due diligence. We actually have a whole department doing due diligence.
Yeah.
Can you share where this approach is innovative, and even for like very, very seasoned investors and family offices, brings to light things that maybe their traditional due diligence approach doesn't highlight?
Yeah, indeed. I mean, IP, at least in Europe, is seen like a legal stuff, a legal obligation, basically, not as a business tool like we can see in North America, for example. So the way IP is addressed today in all these due diligence approach are basically, okay, we will check. So for the best of them, they will do the freedom to operate. Okay. They will do maybe some review of the portfolio. Okay, but that's it. They don't check if the strategy fit, the IP strategy fit with the business strategy. They don't check always, the culture and the management within the company. So it's just like a snapshot at a specific moment, but they don't check the video, basically. They don't check the evolution in time. They just take into consideration the dimension of time, which you can only check if you put the management and the strategy within your due diligence. And because, again, the IP people in Europe are not trained to do management, are not trained to do strategy. They are trained to do legal stuff, drafting patents, doing prosecutions and so on, but they are not trained to think like businessmen. So that's why my profile is very unique, because I'm able to merge science, business, and law together. And if you can't do that, you cannot see the big picture, and you cannot assess in a dynamic way the real value of a company, and you just have a small snapshot in the best case, again, because not all investors are doing all of that. A lot of them are just asking for, okay, do you have patents? Yes or no? Yes, you have. Good. That's it. And we know already that when you have a correct IP strategy, that increase your chance of exit a lot. Because again, most of these if we talk about startups, for example, or deep tech companies, they don't have clients. They don't have turnover. They just have intellectual property assets and intangible assets. Absolutely. So when you put money on a deep tech company thinking that their solution is great, yes, it's good to check the science behind the solution, of course. But if you don't check how the IP is managed, how the intangible assets are managed, basically you just hope for the best, and that's it.
Absolutely. So this is just really providing an entire, new layer to be able to, logically evaluate and best allocate those investment funds.
So just some case studies, anonymous, of course, to show the real impact, the real results. If you talk about quantum computing startups, for example, in Europe, she was preparing for a 15 million Series A round. And being able to identify some issue with the ownership of IP, some open source licensing issues as well, and the fact that basically two guys only own the whole knowledge of the company and so on, we have been able to put in place a correct strategy to quickly, as soon as possible, I would say, turn all these issues into solutions. So recovered IP ownership, creating, of course, a risk mitigation plan, and strong IP maturity roadmap. We have the same with AI medtech company, for example, in North America, where we were preparing for due diligence for strategic acquisition. And again, here we had several issues, mainly about an European trademark conflict. And here it was, for example, a complete new strategy of branding. And again, if you talk with people on IP that do just IP and IP lawyer and so on, they will be good in trademarks law, of course, but everything about branding, about the perception of things, about the neuroscience behind the branding, they don't know. And honestly, nobody can know without the training in neuroscience like I have. So that's kind of logical again. People cannot know what they don't know.
Absolutely. And that's why presentations like this are so important, not just obviously for founders to see the things that they need to be thinking about, right, as they're looking for funding, but very much so with long-term legacy plays, really to know that you're investing in a company that you can say that you have done really your complete due diligence on.
Yeah, exactly. So, for example, again, to other example, a SaaS cybersecurity platform, for example, again, we had several problems with that, and we have even been able to make money with patents using licensing. And of course, a deep tech robotics spin-off from a university. We had, of course, some issues with the ownership on IP because it was a spin-off for the university. So the university was owning patents and so on. So here again, being able to assess the situation and make some informed, data-driven decisions, we have been able to improve the situation. And of course, if you want to put money on a company, you want to be sure that the company is healthy. And the best way to do it is regarding IP and intangible assets today. Why? Because we are in the knowledge economy. I mean, it's not just, of course, IP has always been very important, but 70 years ago, not so important. But today, yes. So, I mean, in this complete framework, we have some tools and deliverables that we provide, of course, which would be a complete asset inventory, value attribution. We have this red flag heat map. We have all these strategic fit scoreboard, executive brief, and so on. All these elements to provide real data to help you to take, as investors or family offices, the correct decision to put your money or not. So what is the value? Basically, it's, of course, you save time, basically, because you take faster decision when you have the good reason to take them. The de-risk, okay, I know that 85% of risk reduction is huge as a number, but because basically before nobody is looking at it, as soon as you start to look at it, of course, it makes a huge difference. Find the hidden value, of course, smart negotiations, future-proof, and of course, a seamless integration, because the idea is not just we have an optional features, which is, okay, we help you to assess the company, and then you decide if you want to put money on it. But that's not, we don't stop here. If you want, as investors or family offices, you can ask the company to work with us. To work with us, why? Just to continue the management. I work as a fractional chief intellectual property officer or chief intangible asset officer with companies, not for nothing. Basically, because at one point, okay, we know that the company is good, we can put money on it, we have solved some issues, but it's important to manage on the long way, and Absolutely. To be able on a fractional basis. Again, these companies, most of the time, they don't need someone full time, but at least every month, from few hours to few days a month, it's important to have someone that can work in-house, that can do the work that a CTO, CEO, COO cannot do. They are not designed to deal with IP and intangible assets. So you need a fractional guy coming, doing the things, and not just saying, you should do that, and so on. Because at the end, they say, yes, great idea, blah, 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 but they don't have time, skills, or energy to do it. You need someone else to come and do it.
Absolutely. So even in the short term, when we're looking at the value, time is going to be a huge bottleneck, right? The lack of expertise you named, and de-risking deals, knowing that, you can sign off on a very, very robust, and complete report. And then when we look to the future, right, that longer term legacy view, really being able to future-proof as much as possible your investment. Gives you more peace of mind, both as, if you're a fund manager, if you're a family, head of a family office, or, if you're an investor of some kind. It's that peace of mind knowing that, you've future-proofed your investment as much as possible, that, gives you something that is close to priceless.
Mm-hmm.
Yeah, exactly. So as you can see, all of that can fit more or less with different actors, investors, and so on. Again, I think family offices are the most aligned with this approach because they aim for a long-term investment, which may be not the same case for all these entities. Of course, we have some investment funds with long-term vision, so it's also some partners we work with. And we are not against working with VCs, of course, we work with them, but most of the time they are just aiming for a quick return, so they not always grasp the complete power of the intangible asset due diligence approach that I have created.
Yeah, and we can look also really back at this group of, investment funds with long-term vision. Buy now, hold forever, right?
Mm-hmm.
If you have a very complete picture. And if you're, able to really visualize the power of those intangible assets, what they're exactly, how they work, and also, as you said, how they need to be managed over time, and really have someone, come in, like that other service that you provide, right? And do this for them. That's a compounding effect, both of education, vision, experience, analysis, in terms of how this investment is playing out over time. And so that just creates, a more and more powerful position.
Yeah.
Exactly. So this is it. This is the intangible asset due diligence approach that is designed for a knowledge economy, which is exactly where we are today. We were not there 70 years ago. Again, this approach means nothing 70 years ago, but now it's time to change the way we assess a company, not just on tangible things, but really on intangible assets.
Brilliant. And also, just to add here, in the larger context, right, of the evolution of science and innovation, these discoveries are just becoming exponential now, right? There are exponentially more and more solutions and deep tech breakthroughs, et cetera. So no one actually would really be able to have a handle on everything that is happening, and being able to do an analysis of all the potentialities.
The speed of it as well.
Yeah, the speed of this exponential increase, it creates a huge divide. And a solution like this one really allows you to be a market leader and be much more sovereign, as well as have a lot more peace of mind as a family office or an investment fund with long-term vision.
Exactly. So thank you very much. And of course, we are available if you have any questions.
Yeah, exactly. So the next steps for those of you who are really interested in this approach that Benjamin here has pioneered, and you're interested to look under the hood, understand how the dashboard works, understand how this could work for your family office or organization or investment fund. Benjamin, where can people contact you, and by extension, Quantum Stellium?
Basically on LinkedIn. Yeah. Benjamin Del Sol on LinkedIn, you will find me easily. And I will answer all your questions and put you in contact, of course, with the good people and the correct ones and so on.
Fantastic. And we'll also pin this to the Quantum Stellium page for those founders as well who really want to be a step ahead. So thank you so much again, Benjamin.
Thank you very much. See you.